In this Patreon requested video, I'm going to discuss and go into detail on the various high-yielding Bitcoin dividend ETFs that exist. After sharing my thoughts on all of them, I'll then present which one I think is the best out of all the options that exist and perform an analysis on it. We'll look at its strategy, dividend policy, and some of the other benefits that exist for people who want a combination of both high income and Bitcoin exposure. Now, the good news is that out of all the Bitcoin ETFs that exist, none of them are really terrible. They all offer high yields, monthly distributions, and they track the performance of Bitcoin. But when it comes to how well it tracks the asset while still offering a high yield, that's where I believe one stands out in particular. As a side note, I'm not sponsored by any company in this video, and these are all of my own personal opinions. We'll start by looking at probably the least popular fund, which is Maxi, which is called the Simplified Bitcoin Strategy Plus Income ETF. The good news is that out of all the Bitcoin ETFs that exist, this one has actually been the best at tracking the actual performance of Bitcoin. We can see as of the making of this video, the year-to-date performance of Maxi and Bitcoin has been almost identical. And in fact, because it pays high dividends, it's actually outperforming Bitcoin itself, which is incredible. Although that is really good news, that's unfortunately where the good news ends. Maxi is the lowest yielding ETF on this list by far, and it comes with a sky-high expense ratio. Simplify is pretty well known for having very intricate and complicated strategies on their funds, and Maxi has the worst dividend policy. We can see the majority of the time it doesn't actually pay anything significant despite having monthly distributions. Overall, Maxi is a good pick if you want to try to outperform Bitcoin, but it's the worst when it comes to dependable income, which I'm assuming is what most people watching this video are looking for. Now we'll look at BITO, which is the ProShares Bitcoin ETF. This one is going to be the highest yielding Bitcoin ETF we're going to examine. According to Seeking Alpha, it currently offers a yield far exceeding 50%. But although the dividends are much bigger than Maxi and any other Bitcoin ETF from my research, they vary significantly from one month to the next. In the last 3 years, it's paid anywhere from less than a penny per share to $1.76 per share. That's a 198% difference in distributions, and this took place in just a little over 1 year. You cannot plan a retirement budget around this much variation in dividend payments. It's also not the best when it comes to matching the actual performance of Bitcoin. Therefore, I think this ETF is good if you're a dividend investor, but you're not depending too much on the income from this fund. You might have REITs, covered call funds, and BDCs, but you still want just a little bit of Bitcoin exposure in your portfolio. I think BITO would be good under that situation. Now we have two synthetic Bitcoin covered call funds that are pretty similar to one another. That would be the YieldMax Bitcoin Option Income Strategy ETF, ticker YBIT, and the Bitcoin Covered Call Strategy ETF by Roundhill, ticker YBTC. The YieldMax fund offers the highest yield out of the two funds and second best overall. The Roundhill fund is the second lowest yielding ETF. Comparing YBIT and YBTC, they perform the worst when looking at price performance. Both funds also vary significantly when it comes to distribution amounts, just like BITO. The only benefit the Roundhill ETF has over the YieldMax fund is that it pays weekly distributions instead of monthly. Other than that, I can't see a good reason for going with the Roundhill fund over the YieldMax fund. But neither of these two Bitcoin funds are my favorite. The big issue that I have is that they all pay dividends that are way too variable. If you're planning to retire off dividends, then you should have a number in mind, like you want $4,000 a month in dividends. If you hold preferred stocks, closed-end funds, REITs, and most other high-yielding investments, you can get a pretty good idea as to when you will reach that $4,000 per month goal. But all of the distributions that we've seen so far are so unpredictable. My favorite fund would have to be one that offers a high yield that's way more consistent. I don't want to see it pay me $3 per share one month and then $1.50 the next. That's why my personal favorite fund in this category would have to be the Neos Bitcoin High Income ETF, ticker BTCI. There are a lot of reasons why I think this holding is the best for investors that are looking for high, consistent monthly income from Bitcoin exposure. It currently offers the third highest dividend yield out of all the other funds we've looked at. If we examine its dividend history, you'll notice the payments are much less volatile than everything else we've looked at. Bitcoin itself is a volatile investment, so it does make sense that the dividend amounts would change more for this asset class than a typical covered call ETF. And with BTCI, there are still some big jumps, but they're not as significant as all the other ETFs. If you're looking for Bitcoin exposure and more dependable income to cover your living expenses, then this is what I think makes the NEOS fund the most attractive option that exists. You won't see your income rise and fall so dramatically. BTCI is also the third highest yielding Bitcoin ETF that exists, at least as of the making of this video. It's also the second best behind Maxi when it comes to tracking the actual performance of Bitcoin. From a price perspective, only the NEOS fund and the Simplify fund are up for the year compared to the YieldMax, Roundhill, and ProShare ETFs. But again, given the fact that Maxi doesn't pay worthwhile dividends most months, I'd still have to go with BTCI on this one. It might actually surprise you to learn that the NEOS fund actually is a synthetic covered call fund. So this would actually be the first synthetic covered call fund that I think is actually really appealing if you're into Bitcoin. So we then have to ask, why has it significantly outperformed the other two funds that are using a synthetic covered call strategy? To get a good idea of what's going on, we need to look at these funds' prospectuses, and this is where things can get a little vague. For this example, I'll be comparing the NEOS fund to the YieldMax fund. Both ETFs don't invest directly into Bitcoin, but they instead invest in various Bitcoin exchange-traded products. This basically means they'll perform their option strategy on a Bitcoin ETF of their choosing. Right now, YBID uses its strategy on YBIT, the iShares Bitcoin Trust ETF, and the NEOS fund uses HODL, the Van Eck Bitcoin ETF. Depending on the fund that they choose, it can do pretty well or pretty mediocre at following Bitcoin's performance. They have the freedom to change their option strategy and change what holdings they're using their covered calls on at any given time, which can make it pretty hard to determine what they were doing just a few months ago. The NEOS fund appears to predominantly invest in Bitcoin futures ETFs, whereas the YieldMax fund managers appear to have more choices. Ultimately though, I think it's clear that the managers over at NEOS appear to be doing a better job at managing their Bitcoin ETF's performance. One additional piece of information I found is that the NEOS fund also uses a bear call spread strategy, where YBIT makes no mention of this. According to Investopedia, a bear call spread, or a bear call credit spread, is a type of option strategy used when an options trader expects a decline in the price of an underlying asset. A bear call spread is performed by simultaneously selling a call option and buying another call option at a higher strike price at the same expiration date. The strategy's maximum profit is the credit received when initiating the trade. A bear call spread can also be called a short call spread. It's considered a limited risk and limited reward strategy. This could also be another reason for BTCI's outperformance. It can employ downside protection where there's no mention of a call spread in YBIT's prospectus. There's still a sense of mystery though to most of these funds, as they basically all say that they can employ different strategies depending on how the managers think Bitcoin is going to perform. But given the performance of these investments and the dividend policies, I still think BTCI is the best option. Again, I don't think any of these picks are terrible, as all of them have delivered positive returns. But the others I think are better for more speculation as opposed to depending on any of them for your income. Let me know if you agree or if you think I'm wrong and that a different fund is better, or if you don't even want to consider a Bitcoin ETF for your income portfolio and why. But with that being said, that's going to wrap up today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.